We're very pleased to have been contacted by Tanzanian Goldfields. Stephen Maloney is the CEO. Andrew Cheadle is the Chief Operating Officer, also a director. Michael Leonard is the CFO. They enjoy 2.65 million ounces of NI 43-101 compliant gold resources in Tanzania. Last year, a company called Geita Gold called us up. This year, Tanzanian Goldfields also. And we're learning about all these people that operate smoothly in Tanzania, unlike Barrick Gold. And we're finding it's a little easier place to do business than the Reputation. And we're comfortable and laid back. We look for close to $3 billion or better in situ resource, or 3 million ounces of gold or better. And we're blessed to have so many good companies just call us up and want to participate. Please, Stephen.
Well, thank you, John, for the pleasant introduction to ourselves. You are right. I know a couple of things that you did hit on there in your introduction. I've been 1 year at this company in this role. Andrew has been about 9 months, and Mike about 7 or 8 months. And operating in Tanzania is a lot easier than its reputation, has. You're absolutely 100% right. This year in Tanzania, we found it very easy to operate in Tanzania, to get around, and we have very good government relations. So why? I'm going to start off, given that this is just a couple days past my 1 year anniversary, and just reflect on a few things for the audience and for everyone. So what did I see when I originally joined? I saw an opportunity in which, as you mentioned, there's 2.6 million ounces in measured, indicated, and inferred resources. So it has a good foundation. But also the importance of that foundation is mixed. 10% of that resource is approximately 10% is in the oxide, and approximately 90% is in the sulfides. So what did I see? I saw an opportunity to take a company, to put it into production fairly quickly, to make it sustainable so it can have its regular value creation opportunities that a miner has on a sustainable basis, i.e. produce some cash flow in order to fund exploration expenses to expand the resource, as well as the costs related to the larger studies that are necessary from a project development perspective, and also to help fund the equity of those larger projects. So what have we done over the last year? We've really set that foundation. Myself, Andrew, and Mike, as part of the executive team, as well as Kalaf, our Tanzania representative, set that foundation in motion this year. We've got a plant 360 tons per day currently operating almost through final commissioning. We're expanding that to 1,000 tons per day, cost effectively, high returns. We have drill bits in the ground now. 2 exploration rigs are currently ongoing, and we have our PQ holes drilled and looking to send those samples off to the labs as part of our sulfide development project. So we've come a long way in the last years, and ultimately as well, we solidified our social license, as well as put in place a reinvigorated, young, entrepreneurial management team. So I look very much forward to giving the presentation this afternoon along with my colleagues. So with that, as John mentioned, we're in Tanzania. We're in the Lake Victoria Greenstone Belt, starting off with a very, very good resource, high grade for an open pit, roughly just over 1 million ounces in the measured and indicated category at 1.8 grams a ton. So very, very good. Sorry, 2 million ounces. So it's a very, very good grade for an open pit. And we have another 630,000 in the inferred category at around 1.11 grams a ton. Our Buckreef project is permitted, fully permitted. It has a special mining license. We're in a region with other majors. Barrick Gold is in our region, as well as Anglo Gold Ashanti. One of Anglo's largest mines is in this region in Geita that produces 400,000 ounces. This is a highly prospective geological setting with great infrastructure. One, you have human capital. The region has been home to mining for 20 plus years, which means there's a lot of good talent in this region in Tanzania. We're able to drive to our site, so most of the road is paved, and then about approximately the last 50 kilometers is unpaved. We're connected to the national power grid, and there's new hydroelectric facilities going in place. And the pylons are within 10 kilometers, 10, 15 kilometers of our mine site. And most of the power that we currently get is from the grid, and on hydro, which is good from an ESG perspective. So we've been very pleased with the infrastructure that's been in place in Tanzania in order to ramp up our operations, as well as the local setting with regards to geology, etc. So with that, we have a good base. But we need to make our base sustainable. We need to make our company sustainable in order to create value for shareholders over the short, medium, and long term. So in that, we've done a lot of things over the last year. First thing, as I mentioned earlier, 10% of our resources are in the oxides. So we put out in place, expanded on our test plant, put in place a 360 ton per day plant. That went into commissioning in November, early November, and is in the final commissioning stages now. We're expanding that to further to 1,000 tons per day. The ball mills are expected to arrive by the end of December. They're on the ocean currently. We looked at where they were this morning. They should be in the Port of Dar es Salaam by roughly the third week of December. And this is important because this starts to create cash flow at Buckreef. The small plant, I'll get into in a second, it has around 750 ounces per month in production, and a larger plant will be capable of producing over 20,000 ounces per annum. That cash flow from those operations will be utilized through exploration. So we have a lot of targets on our property. We've discovered 2 new zones over the past year. Andrew will get into that in a second. The project is very prospective. So we are looking forward to what our exploration program will lead to in the next year and coming years thereafter. And then then as I mentioned in our Buckreef main zone, 90% of the ounces are in the sulfides. We did a preliminary MET study this year on that with very good results, over 90% recoveries in that with a simple, straightforward flow sheet. And we're going to make this a much, much, much larger project than a 2018 PFS. We're hopeful that this project in the main zone can be 150, 200,000 ounces plus for a 10 plus year period. And we need to do some work on exploration to expand that resource, convert resources to reserves, etc. And so we're very much looking forward to expanding that project. With regards to one of the things that I did mention is, when you come into a situation like this, you can't do it all by yourself. So we did change over our team and put in place a lot of experienced professionals over the last year. Andrew, who's on the line, has experience in both large miners and junior miners in senior executive roles. Mike is a former Barrick executive in both FP&A and investor relations, so very experienced. We have Kalaf, who's a Tanzanian businessman who has very good connections in the political sphere in Tanzania, which is very important from a social license perspective, so we can have the right meetings at the right level within government. And then we have our general managers on the ground in Tanzania with Gaston, who helped build Barrick's Buzwagi plant. He helped Teranga and Senegal build their plants, and now he's building our plants in Tanzania, very experienced individual. And Isaac, who's run very large exploration programs for miners throughout the world. Both these individuals have their families reside in Mwanza, started off in this region with the major miners, both Barrick and AngloGold Ashanti. So we're very pleased to have them. We're also very pleased as we build out our Buckreef team to be able to get very, very talented individuals in Tanzania, which is very important. With regards to just the production that we have ongoing. So we're lucky because 10% of our resource is in the oxides, which is basically at the surface. And so we currently are ramping up our 360 ton per day facility that will produce 750 to 800 ounces per month at roughly the same cash cost. So very good little facility. It cost us $1.6 million payback. You can do the math, very quick. Thus the IRR, very high. From a business perspective, we would like to be doing projects like this all day long. We're going to do the same thing on 1,000 tons per day. That will give us over the 8-year mine life, which is only 10% of the resources, 15 to 20,000 ounces per year. It will go on a lot longer than that, but by that point in time, this facility will be a lot bigger than that. And in the first couple of years, the production profile will be greater than the 20,000 ounce mark with a good cash cost, very high return, very quick payback period and very high return project as well. We've estimated that the capital cost for that project upgrade will be approximately $4 million. As I just mentioned, the ball mills are on the seas. They'll be in Dar es Salaam by the end of the month. So this will be a very quick project. We've given the market guidance on Q2, Q3. Hopefully it will be earlier, but we want to make sure that we are on schedule on that. And so we're very much excited for that. But these plants are great. Their start, it gets Buckreef moving. I assume that we're going to have a lot more production than this over time. That will be guaranteed as we roll out our plant here at Buckreef. But there's very, this is very prospective ground and a lot of upside in the exploration potential. So I'm going to turn it over to Andrew, and he'll go through what we have in front of us on our 16 square kilometer property. All of our property can go into production at any point in time, given the special mining license that we have. Andrew?
Yeah, Stephen, thank you very much indeed. And I always like to say the oxides are really just the appetizer to the main course, which of course is the sulfides and the multi-million ounces that we have in that. We have 4 little thumbnails in front of us, and I'll just take the audience through them very quickly. You can enlarge them on the website as well. The first one on the top left is a section through the main zone. You can see the background there, the little bit of gray is the 2018 pre-feasibility pit shell. And you'll notice that there's a lot of drilling that's underneath that. You'll also notice that the deposit is both open to the south, to the north, and we have identified through our analysis 2 to 3 high-grade shoots. But I'll leave this one with the main point, which is the last drill hole to the north is 50 meters width of drilling at 1.8 grams a ton. We're currently drilling now off to the northeast to further expand and open up that ground. It is a shear zone, and we are in the Archean greenstone belt. So again, some of our audience probably quite familiar with the Canadian Shield, such things as the Dexter Porcupine shear zone, or those from Australia would be very familiar with the Yilgarn. So we're very familiar with how the gold controls of mineralizations operate. And that would then lead us, for example, to the Buckreef West, which is in an advanced stage of exploration. We'll do some infill drilling over the next year to bring this into resource. This is essentially a splay that is off the main zone and will give us some very near main pit additional resources, both in the oxides and on the sulfide material. But I think the big news for us has been the discovery of the Anfield zone, a brand new discovery. Stephen always likes to say, that I kicked the geologists out of the office, and yes, I did, and I got out there with them as well. And what we came back with from that field work is identification of a 3 kilometers of additional shearing identified through grab samples and some small-scale artisanal pits, none of which are active at the moment. And what came out of one of the deep ones, where a shaft had been sunk 30 meters deep and about 10 meters, maybe 20 meters of development, some stunning grab samples. You can see this in the bottom left, and the inset on that is sulfide, brecciated, brittly deformed greenstone belt rock with also sulfides, also gold. And that particular sample being held by my colleague is running at 28.5 grams a ton. Additional ones we had out of that area, 37.5, 14, and so on. So we have to do a lot of drilling on that. There's quite a bit of excitement around that. And if we look to the slide on the bottom right, you can see the sort of the Anfield zone is just located only 500 meters to the east of the main zone, but to the north is anchored by a historical resource, the Eastern Porphyry of about 100,000 ounces, and to the south by an operating mine, a Chinese group that are operating a small-scale operation there. So we've got 3 kilometers of new zone that was not identified as such at the beginning of the year, anchored to the north, anchored to the south, with some high-grade samples in between. We've also continued to evaluate the geological model, and I can comfortably say that the entire property is prospective. We've got an awful lot of work to do. We've identified over 7 additional targets, making a pipeline of exploration that will take place over the coming years. And as we've continued to get this property under control, So we've just started to have a look at the regional potential and just to cast our eyes over the fence to see what's around us as well. Stephen, back to you.
Yeah, thank you for that, Andrew. I always have a smile when it comes to exploration. You know, very, very enthused for what's to come around the exploration potential of the property, and hopeful that we can really increase the reserves and resources as a result of the program that you and your team are putting in place on the exploration side.
Yeah, and thank you, Stephen. And also just for the audience, again, why did I join? Again, as you said, there's 2.6 million ounces in all categories. A large part of my career has been actually visiting properties and assessing them, and particularly loved what I saw here, just in terms of the robustness of certainly the first 5 to 10 years of production, and certainly the upside potential as well. Thanks.
Yeah, thank you for that, Andrew. So with regards to upside potential on the production side, as I mentioned, and this has started to take shape over the past year in our sulfide project development, which is 90% of resources on the main zone only. So that's important to understand, is that doesn't include Buckreef West, doesn't include Anfield, and what else may be across this property. So there was a robust 2018 pre-feasibility study, but since that point in time, the resources had doubled. So at that point in time, the resources were just over 1 million ounces. They're now around 2.6 million ounces. And in that study, capital costs were reasonable. Cash costs were great at $735 an ounce. And the after-tax IRR was very impressive as well at 74%, all at $1,300 gold. So it's obviously a $1,750, $1,800 gold where we are today. Those numbers all increased. We've taken this as a baseline and improved all the metrics, and our goal is to really improve all the metrics of this particular study. For instance, stripping ratio in this was quite high at 9.5. What we're experiencing in our current mining plan is significantly lower, below 3. So that's an improvement in that area. We'll also look to have a mine plan that produces 150, 200,000 ounces plus, but we have a lot of work to get there. So what we need to do is we need to convert some resources to reserves, and Andrew has a program in place to do that, and to upgrade the reserve categories, validate our really good metallurgical results that we got in the spring, which was a straightforward flow sheet of flotation followed by CIL. We're currently utilizing CIL on our oxides, and we will get into some sulfide ore as part of our 1,000 ton per day plan. So we'll get a good sense from our own operations if we could say CIL the sulfides as well. If we can, then the CapEx number will be lower because we won't need the flotation cells.
Did you say what the new strip ratio would be?
Yeah, so there's a lot of work for the entire project, John. We wouldn't have a sense. We have a sense of where it's going, but
It's going to be below 9.5, but you don't know how far below.
Well, I know for the current mine plan that we have in place, it's roughly around 2.6. Now, for the entire pit, for a larger project, we don't have the work done to validate what we think it's going to be, but we're fairly confident that will be well below 9.5. And getting into the other part of the slide here is we do need to do our geotech analysis, because a couple of degrees difference in our pit slopes will have a factor of reducing the strip ratio, because it involves millions of tons. Also, we need to look at really what we have in our footwalls and hanging walls, because there is mineralization that's not included in our resources in those zones that will also reduce the strip ratio. Anything to add to that answer, Andrew?
I think you've got everything there, Stephen. You can just see on the slide, all the other things we would expect is, but we're going for dry stack tailings, and some species at risk analysis has started, and there's nothing to be concerned about.
Yeah, so John, to answer your question, when we do our geotech work, we also need to do our water work to make sure we have the stability of those pit slopes, and then we'll have a much better idea of where that's leading later on in the year once that work is completed. So carrying on, we're also going to be evaluating, just like the PFS that was done in 2018, a phased development approach. Right now in our mind, we're thinking roughly about a million tons phased approach. So 1 million tons, then followed by another million, into a range of 3 to 4 million tons per annum from a production capacity perspective or processing capacity perspective. And we'll evaluate that. Our own internal financial models tells us that that's much better from a return perspective, as well as from a shareholder returns perspective as well. So we're evaluating all of those sort of phased approaches to sulfide project development. We'll be rolling this out over the next 12 to 18 months. There's certain aspects of this that aren't within our control on the timelines. The met work takes the time that the met work takes. We'll need to be having proper geotech work. And we'll also need to get back our assays in the lab from our resources to reserve conversions, and then we'll come back to the market in the appropriate period of time. Meanwhile, Andrew's exploration program continues, as well as the production profile continues to increase at the same time. It's a lot of work being done all in one period of time. A lot of ways to create value. With regards to where our valuation is today, this is as of November. I'm a junior mining CEO, so I'm going to say we're undervalued relative to peers. But given what we have underway, we have a production profile that's going up to help self-fund the exploration and project development aspects of the company, which is much different than a lot of other juniors. And we also have a production profile increasing, as well as a massive exploration potential across our property. So I'm pretty confident as we get through our business plan and start laying it out, that this valuation gap will start to narrow over time, and we should be at a good point from an entry perspective for our prospective shareholders. With regards to the overarching goal of where we really would like to get to, ultimately, all these mines here that you see on the slide are major mines, predominantly now owned by majors. We're confident that we'll have a low cash cost, as well as because of the grade profile that we have. We're confident that there will be a lot more resources here over time. And if we can get this property into a property that produces significant ounces for 10 plus years with a lot of resources at a low cash cost, we'll have created a very valuable mining enterprise at Buckreef. All of these other dots that you see on the slide here are single mining assets, utilizing straightforward metallurgy, same as us, and process plants. And so the ultimate goal is to get down into the lower quadrant there and to create a lot of value for shareholders. So where would I like to leave you? One of the slides that I would like to discuss now before this ending slide is ESG. So Andrew, you want to give an overview of what we're doing on the ESG, because it's very important to stay profitable, but it'll also have a lot of good environmental practices, which we do. We recycle all our water, 100-mile diet, those sort of things. You want to give an overview to the audience of our ESG and our CSR programs?
Yeah. Thank you, Stephen. And I think, again, our audience should know that both yourself and myself have spoken quite a bit about ESG, and absolutely right. Profitability and good ESG practice go hand in hand. And on the ground, what we're doing is we've got full recycling of all our water, so we don't discharge from site. We're 100% Tanzanian in our workforce, and we continue to focus on employing locally. That's been very, very important. We've chosen to focus initially in conjunction and partnership with the local governments and councils and the district commissioners on education, both at the primary school level and at the secondary school level. And it is our goal over the next 3 to 5 years to be hiring from the secondary school into our workforce as we grow. Important also is in the government side of things is our relationships with the government. We are in partnership in developing this mine with the government and with the community, and so we do hold calls and meetings with them quite regularly. As Stephen, I think the other one is health. One of the key things to us is clean water. This is a part of the country where clean drinking water is still in the developmental phase, and again, we're working with our local communities and have reached out to some NGOs in terms of provision of clean drinking water. We're a gold mining company. We don't buy or produce clean drinking water, but we need to make sure that we have it, of course, for our own workforce and for those that we employ from around us. And we link all of this into SDGs, back into elimination of poverty, good health, education, and so on. So over to you again on that, Stephen.
Yeah, no, thank you, Andrew. The property itself lends itself to some good ESG practices in the infrastructure as well, given that we are on a national grid, which means hydroelectric power.
That's correct.
That's a good thing. And it also, the tailings are coming out to be benign and non-acid generating, which can lead to dry stack as opposed to wet stack tailings. So we should be able to rate very high on the ESG ratings as we continually develop this property, and our cash costs are coming in fairly good at this point in time and low. So we're hopeful that we'll have ratings both on the profitability side as well as the ESG side. And so very excited for the prospect of that. So where would I like to leave the audience here today is we have a substantial permitted resource. That's where we're starting, that we can really expand upon. We have a new and rejuvenated management team. We're expanding our low-cost oxide production as we speak. We have a good potential on the exploration side, great, I would say, for resource expansion. We have a very large project in the Sulfide development project that only accounts for the main zone currently. That will change over time as we get more information on Anfield, the Buckreef West, etc. We're an attractive valuation versus our peers, and we're actually executing on the ground. So here's a slide of activity at Buckreef over the last year or so. As you can see, very clean core shack, one of the cleanest that I've ever seen. New tanks on the property. You see myself standing there with our co-general managers, and those tanks were built and bent by steel from a Mwanza supplier who does shipbuilding. So when you look at local procurement in Tanzania, it's quite good. The private sector is fabulous. We've had some very good service from them, and we're able to put in place a high return project because we're able to keep capital costs under control. We have contract miners on our site. That contractor is very good, led by a very experienced mining engineer, which is important. Not just anybody. That individual and his company understands how to go about mining blocks of ore. We have one of the schools that we helped develop in our area. It's actually very close to our property. You see the ball mill there with the plant in the background. You see people out on the Anfield zone. You see politicians taking credit for the 100% Tanzanian workforce. Fine by that. You see our first blast in our pit. That means we're getting to some of those high-grade ore blocks down below where we made that blast. And ultimately, you can't do this without good people. So we have some smiling co-general managers there. And we have a very enthused, energetic workforce on site at Buckreef. So we can't do it without them, and I would like to give them quite a bit of credit.
Absolutely.
So, yeah, so thank you very much. John, any questions?
The first question from the audience, and there's a few, how would you describe the socio-political environment in Tanzania?
That's a good question, John. So the political environment, we've had lots of meetings with government officials over the last year. And I would say the political environment is much changed from the beginning of the year. I was comfortable with the political environment when I joined because I have a lot of experience in working with governments and working with companies and dealing with government situations. But since the beginning of the year, we've had a change of government. That change of government is very pro-investment. And we've been working quite closely with both our joint venture partner and the government to move things forward. And it's been a very, very good discussion, and we're very supportive to the point that we're to the point now where we can have very open and fair conversations with everybody in Tanzania, and they ask us sometimes for our advice on how policy should be set. So that's a big change from the beginning of the year. But what I'll say, and then I'll have Andrew add to this, is what's really important is the ability to move forward assets and the ability to execute on the ground. And from a Tanzanian perspective, I got to say, I've been very impressed with some of our contractors in FEMA for contract mining, CSI in the electrical works, and also the local foundry in Mwanza. We didn't need to bring back one of those steel plates on those tanks, and when they were welded, none of them leaked. Surprising that, not surprising, a shipbuilder can weld tanks that don't leak. So we've been extremely impressed with the ability to get things moving. We haven't been slowed down by any permitting or any holdouts of permits or anything like that. It's been very pro-business since we've been there. Anything to add, Ed?
Yeah, I think so, Stephen. I think the question lends itself, to a sort of a political bent, and I don't think I'll be speaking out of turn if I reference some of our meetings with the Honourable Minister of Minerals, a dynamic person, probably in his early 40s, if I had to hazard a guess. And our meetings with him and his entourage, of course, sort of go like this: they're delighted that we're in the country, that we're busy building the mine, but they're saying, please, build that mine, and when I see you in 3 months' time, I don't want to be talking about the same things again. I want to be talking about the progress you're making. And we're like, well, actually, so do we, and we want to be talking about that progress too. And it is very open. It says, well, if you need any help from us, if there's anything in the way, get in touch. So we find it supportive that there's a government that is actively behind us to build this mine.
Yeah, it's about getting things done, and you're able to get things done there.
Yeah.
So,
Stephen, I think the final quick comment is there's a very strong and active chamber of mines as well, which is important to note.
My experience in Africa is very limited. I've been to Ghana, South Africa several times, DRC, Congo, and Mozambique.
Yeah.
I took a Newmont trip once to Ghana that was 1 week. And we went first to Newmont's operation in February '06, then to Golden Star, then to Goldfields Tarkwa, and then to Anglo Gold Ashanti Obuasi. And I didn't realize it, but at Newmont's operation, everybody was happy, the children waved. And Newmont basically just conducted themselves like an American company. Then I went to the second mine, Golden Star, and their operating people were all South African. And one of them was very fond of the naval salute with the palm outward. And he required that every Black employee give him the naval salute upon sight. It was a little corny. I started giving the naval salute to every Black person when I saw them, and it really made the South Africans uptight. Then we went to Tarkwa, which was Goldfields, and that was South African. Then we went to Obuasi, which was originally Ashanti, but then taken over by Anglo Gold that was South African. And I didn't realize it at the first stop, but Newmont actually had very good community relations because they weren't South African and weren't about the naval salute and all that stuff. So in your machinations in Tanzania, do you try to consciously not have South African technical people?
So John, to answer your question, Tanzania is an extremely safe society. For instance, we don't need a security detail, like you probably in some of the areas that you went to needed a security detail in some of the countries that you just mentioned. You can fly into Dar es Salaam, take a flight up to Mwanza. Andrew and I rent a vehicle and we drive ourselves to site, and we all feel very safe doing so. It's a very peaceful and respectful country. And so one of the things about Tanzania too is just like you and I, most younger Tanzanians now have grown, and ones that have grown up in this region, are educated outside of Tanzania and at very good technical schools, and the schools in Tanzania are very good as well from an educational perspective. So from a technical perspective, we're able to find extremely well qualified, experienced individuals in Tanzania. And I think the approach that I take in all my business dealings is, if you respect people, realize that all peoples are just as smart as you are, and they work great and they take pride in their work, they have a bounce in their step, then you get the same sort of respect back. So that's the way we approach business in
That's right.
in Tanzania, and it has worked out very well thus far this year.
Yes, Stephen, it is very much about responsible, respectful relationships in all of our dealings. And back to your other comment about the education levels. For example, President Hussein, or Mama Samia, as she likes to be known, has got a PhD from Manchester University, worked for the United Nations World Food Programme. People we're dealing with have often got master's degrees.
Yeah.
2 of our employees have come from a school for gifted children. So there's a great deal of skill and talent for us to work with in Tanzania.
So I'm going to take more questions from the webcast. What is the attitude toward mining and foreign investment in Tanzania? How has policy been changing since the unfortunate demise of Magufuli? I don't know who Magufuli is, but the question.
Yeah, Magufuli is a former president. So that's a good question. As we answered earlier, the investment climate is improving in Tanzania. The government is working much more closely with Chamber of Mines around laws. We expect to see some changes from the 2018 laws that were in place under the Magufuli regime. They've been very respectful of us wanting to move forward the asset, and we've had very good conversations. What I would say is what has really changed is there's no longer an antagonistic approach to foreign investment in Tanzania. There's no longer, government officials holding up permits or anything of that nature, which I believe has been rumored to happen before in the past. So right now, Tanzania is very much open to investment and fully expect to see that going forward. And in my experience in advising governments, and I've advised African governments and Central Asian governments and the likes, Tanzania is going a lot quicker than I anticipated in getting its foreign investment back by just being good corporate citizens with the business community. Yeah, mining is a major industry in Tanzania, but there's also a lot of other very large developments, particularly in oil and gas and LNG, et cetera, and pipelines and rail and other infrastructure investments that are going on in Tanzania that the mining community wouldn't be as aware of, that are moving forward quite quickly as well, and they're in the tens of billions of dollars of potential investment.
So mining is a core industry. What do you think it ranks in Tanzania in terms of contributions to GDP?
It's roughly about 5 to 10%, and they're hopeful to get it to 5 to 10%. Importantly, though, John, it's one of the largest foreign currency earners to the country. So when COVID hit and tourism, which was the highest, given that you have the Serengeti, you have Zanzibar, you have Mount Kilimanjaro, so tourism is a big industry there. Mining kind of kept the currency higher, given the fact that it was still a significant contributor from a foreign currency perspective. So it's an important and growing industry in Tanzania, and they want to secure larger and larger investments into the sector. And they made that very clear with us.
More questions from the audience. What instigated the change in management? Did Jim Sinclair just want to retire?
I think, look, for a company to move forward very quickly, it needed a very young, energetic new team to be able to do that, and with the relevant experience from managing, all operations of the business. So if you look at the management team that I've brought in over the last year, there's nobody there like me. I'm the only guy that kind of has my profile, and then everybody else has different profiles, and that's for a reason, because it takes a lot of skill sets to operate a mining company and create value. So I have more of a managerial skill set, although I'm very dangerous at geology, metallurgy, and mining, which the employees and colleagues are learning very quickly. You won't be able to pull too much over my eyes. And then bringing in the exploration side with Andrew and Isaac, the operations side with Gaston, and we have a very good mining engineer in Eric, and the finance side being led with Mike. So what we did is we put in place a very well-rounded, very experienced management team to move this asset forward extremely quickly and to create a business that's sustainable and creating cash flow to fund the value creation activities that are necessary in a mining project. Okay, I kind of see where financial markets were going and where they are, and you need to have that underpinning of support and be a sustainable business.
Yes, Stephen, if I may just add, and some of our audience may have seen in a press release that, of course, Mr. Sinclair, Jim, has turned 80, and that's certainly a different phase in life as well. And I think we have to respect that as well.
Yeah, exactly.
The next question from the audience: the State Department has issued a warning for Tanzania. I think it was about virus in the last few days. How does this affect planned exploration process, getting technical people in and out, et cetera, getting drill samples in and out? Are the assays done in Tanzania?
Yeah, it's a great question.
Great question.
I'll take it first, and you can add to it. It's so we've been very lucky over the last year with COVID. It hasn't slowed us down. It actually probably made us look a little bit more towards Tanzania, which we did certainly because we're 100% Tanzanian, and it enabled us to be able to move our operations forward very quickly. So we haven't been interrupted by the supply chain disruptions either. Like I said, the ball mills are on a ship, so they're arriving on the 3rd, 4th week of December. We were able to do the same in the first set of ball mills. We have COVID protocols in place, obviously, but we're able to find the technical skill sets in Tanzania. Our assays are all processed in Tanzania. We'll need to send our met work abroad, but that's just only to put them on a plane or in a transport container, so we shouldn't have any issues with getting our met done. So look, we take COVID very seriously. We have protocols in place. I've been able to get over there 6 times this year. Significant amount of time on the ground. Andrew's been there 180 days. Mike's been there 3 or 4 times. So we've been all very lucky to work around COVID and move things forward, which I'll give kudos to the broader team for that. Andrew, anything to add to that?
Yeah, I think it's fair to say, Stephen, that and John on this, that the Tanzanian workforce, certainly our senior management team, have now all been immunized. COVID safety protocol is a daily thing, and to get into a little bit of minutiae, if any of us were to visit site, and that includes myself and Stephen, is that we have to undergo a health check before being allowed to go forth onto the mine site. So specifically to the question, there will be no impact, and there has been no impact of COVID on any of our exploration or mining activities.
In actuality, I hate to say it, COVID may have been a benefit because we're able to supply and get everything in Tanzania. And we're in now, we've learned how to operate in the country as a result.
And it's a very different environment, Stephen. Half of Tanzania's population is under the age of 20, so it's a young population. And whilst Tanzania has been impacted by the waves, they've always been muted by comparison to what we've experienced in North America or Europe. And so it's a younger population, but also a lot of life is lived outdoors. So for example, we have meeting tables, boardroom tables outside under roofing or under trees. And that, of course, makes for a healthy work environment as well.
Stephen, if you were to fly from Toronto to Dar es Salaam or go back and forth to Tanzania, what is the red tape you'd have to do?
So for to get into Tanzania, the red tape is you probably have to take a COVID test beforehand to get onto the airline. You also need a COVID test when you land as Canadian. If you're a U.S. citizen, you need a COVID test, and then you take one as you land. So it's a pretty straightforward process to fly from Toronto to Dar es Salaam. I've taken multiple routes this year. I've flown through Ethiopia, direct from Toronto to Addis, and then down to Dar es Salaam. I've also done that through Qatar. I've done that through Turkey, and I've also done it through Germany. So lots of routes down. Andrew flies from the Netherlands, but it's pretty straightforward. You get a business visa and you go on in, but you just need your COVID test. Come back home. What you need is you can't leave the country without a COVID test. So you need to have a COVID test that is sanctioned and signed off by the government laboratory in Tanzania. It is checked before you get on the plane to a government database and stamped. And then so really there's no COVID cases leaving Tanzania on the airlines as a result. And then you use that COVID test to come back through into Canada and the United States. So it's a pretty straightforward, simple process.
Doesn't sound any different than going from the US to Canada and back.
It's probably easier.
Last month and a half ago, I went to Cote Lake and I took 3 COVID tests to get in and 1 to get back.
Yeah. Well, I've had a lot this year, yeah.
So
I've had a lot of
it'd be easier to go to Tanzania than Cote Lake. Regarding
good time to go to Serengeti, not a lot of
stability in Tanzania, you mentioned hydropower is primary, which is encouraging. How much of Tanzania's energy is imported now and anticipated over time?
Yeah, it's a good question. So I don't know the exact numbers on the way the makeup of the electricity network. I do know that there's a large new hydroelectric facility to come online in the next, I believe, 2 to 3 years. And the power lines are being put in place right now. And most of the power in Tanzania is predominantly hydro. I don't know how much is imported from other countries. I don't have the answer to that question, but good question.
Well, you need to raise capital to fund the expansion to 1,000 tons a day for $4 million.
We, as we reported on our in a press release earlier in the fall, about a month or so ago, the expansion will be paid for out of treasury and some cash flow proceeds from the existing smaller plant.
In the long term, does your team want to continue operating or building? Or is it a lot of the companies we host are more geologists and entrepreneurs and small teams without depth of operating management. And some of them want to just advance the concept and then sell out. Where do you guys see yourselves in 3 to 5 years?
Yeah, so that's a good question. I think parlaying into that, John, is financial markets continually change, and the valuation of mining companies continually change over time to different valuation metrics. So I'm a firm believer that you need to have a sustainable business operation and continue to advance your projects along the traditional value creation track. So we're lucky in this asset, the 10% of our resources are in the oxides. We can put up very good payback period plants to generate some cash flow to pay for our exploration program, as well as our sulfide development project. Where we'd like to be in 3 to 5 years, I would like to have an asset that's capable of producing 150 to 200,000 ounces over 10 plus years of mine life on this property or even more. Would we be in operations or would we be looking to sell? I think you always have to keep on developing a business. That's why I say, with regards to building things out in phases, we've started. We're small phases now, but those phases will get larger and larger over time. If M&A comes on the table, then that would be as a result of doing the right things and successfully operating a business. What I don't want to get into is what you just described of just drilling and putting a project together and always having to rely on capital markets for funding of that.
So if your oxide funds the sulfide and you don't need to access capital markets, you can just go about your merry way. You should be able to operate as you choose. Many companies have a need for external funding. Like last week, Osisko Mining entered negotiations to sell half of their asset. They were up to 400 million diluted shares. They've drilled 1.5 million meters, 1,500 kilometers, and they're still drilling.
Yeah.
And they need to spend as much more to build the mine.
Yeah.
The previous speaker, Wallbridge Mining, has been drilling 3 to 5 years at the same place and has almost 400 million shares. So that some of the companies have huge properties with coarse gold and complex geostatistics, and it's almost a torture by 43101. Here you have your resource defined without drilling 1,500 kilometers in the far north in a residential camp setting where it's expensive.
Yeah.
So what is your attitude, Stephen and Andrew, toward the 43101 process? How much do you need to update the 2018 study? Are you comfortable building the mine without doing a 43101? If you don't need to raise money and do a road show, you don't need to have death by consultants.
So John, you and I both, and Andrew and Mike have been through a lot of 43101 studies. And if you look at what the 43101 study is, metallurgy is an important component of that. We'll be doing metallurgy because that's always an important component. You don't want to screw up on that. What we have currently is we know how the oxides react on the top. We know had a preliminary met study had 3 deep holes on the bottom. We've now got the holes in between that will be sent to the lab. So we're hopeful that we don't see any surprises there. You need to get your pit shells right. You need to do your proper geotechnical work to make sure you get your proper strip ratios and groundwater in order to get a pit that's going to be sustainable. You need to know what your operating costs are. That's a big assumption in a 43101 feasibility report. If you're mining and you're actually processing, you kind of know what your operating costs are. And if you're drilling and blasting, you know what it is. So, your question is very good. Do you actually need to go to a full level feasibility study on your sulfide project if you're, creating cash flow to continue building it out? Given that a lot of the components of the 43101 or the risk components of the 43101 are already covered, and you probably don't need to go there. So, what I would say there is our business plan will always be fluid if we can always put in place high return projects that continually expand production over time and be very confident that in the asset and the way it's going to develop out. Absolutely, that's exactly what we're going to do, because that makes a lot of good business sense.
So you're going to do the technical work, but you might not lay down $1 million to get a Bechtel name on a study.
Perhaps, yeah, it depends. That always have to be a decision at that point in time. Remember too, the mining industry is valued based on net present value as well. That's one of the metrics that you value a company based on. So we have to be cognizant that we can't get too far away from that as well. We do need to show the market an improving NAV and an increasing NAV. So it may be, it may be well worth it to spend the money on the study so that you can show that big NAV if it's in that study.
Usually the studies are 6 months late. In addition to their cost, they delay the NPV that way.
Yeah, there's lots of factors to determine. You're asking great questions. Mm-hmm. And they all have to be evaluated at a period of time.
I have a little bit of QP nausea. So a lot of
you and I both.
John, as a QP, I won't be offended, don't worry.
A lot of the questions
I'm a CPA. I'm a CPA, and I have accounting nausea at times too. So
the shareholders are a little grumpy because the gold stocks have been going down for 16 months.
Yep.
And the same question is coming in for each company. This person asks, what is it going to take to see the stock price move up?
Yeah, so a couple of things, and I still do work around this, John, is one thing that I have noticed in the market is that if you are fully financed and don't need to access capital markets as often, you've either in the gold space stayed level or you've improved in value. So for instance, there has been some project development companies that come out with a financing plan that have improved in value. in the mining space. But typically, the juniors that have been issuers over the last 3 to 5 years, and share counts have risen, have been the ones that have been under the most pressure. So is there a financial trade being played? I don't know. I can't prove that. What I think we need to do is we need to have a sustainable business in which we continually develop value for shareholders, and it may take a little bit more time than quicker through operations, where we don't have constant pressure and overhang over our heads as a result of perceived potential financings.
So continuing, how long for drill results from Anfield and Buckreef West?
Yeah, so drill results from Anfield and Buckreef West. We currently have 2 drill rigs that are into our main zone, and we're currently undergoing the land compensation process along the entire property that's in our MD&A. I would expect to see drill results start coming up from Anfield, Andrew, in the late first half, early second half of this year.
2022, yeah, that's correct.
Yeah, 2022, yeah.
What is the estimated cash cost to go to full feasibility, and how will those funds be raised?
Yeah, so to go to full feasibility study will require dollars for some drilling, dollars for the met study. Those are the big things in geotech. I would suspect a feasibility study will cost anywhere from $3 to $4 million all in, but some of this work we do anyway. And so that's one of the reasons why that 1,000 ton per day plant's going up.
Is gold the only mineral to be mined?
Currently, and Andrew can answer this given the type of deposit that we do have. Gold is the only resource currently being mined.
Yeah, that's right, Stephen. As our network shows, it's a very clean deposit, and gold is the name of the game for us.
In your recent news release, you indicated that you had approximately 10 million of adjusted cash balance on the balance sheet. What is your approximate cash burn per quarter looking into early 2022 and current plans for building the 1,000 ton a day plant? This question doesn't take into consideration that the 360 ton a day plant would start to generate some cash.
So if the 360 ton per day plant weren't going to generate anything, then if that was the case, then we would lay off most of our staff and just build our other plant and not have the same cash burn that we currently have prior to the 360 ton per day plant. So the 360 ton per day plant is a start to eliminating the cash burn at Buckreef. It will eliminate it. And then we'll start to be slightly cash flow positive going into building our 1,000 ton per day plant. And at $10 million that is referenced, there has been some of the capital to be incurred, including deposits on ball mills, et cetera, for the 1,000 ton per day plant already included in that number.
And you've said you need $4 million to get to 1,000 tons a day.
Correct.
Next question. Tanzania is surrounded by a range of countries, including Uganda, Rwanda, Mozambique, Zambia, DRC. How stable are those countries politically and economically? If I could paraphrase this question, there's some rough boys in the neighborhood. Are they going to screw up Tanzania?
I don't see that. Tanzania has been around as a peaceful society for a long period of time. It is made up of, different religious backgrounds that get along really well, and different tribal backgrounds that get along really well and are fairly mixed. So with regards to, it is on the border of the DRC. I don't see a lot of influence in Tanzania from the DRC. Don't see a lot of influence from Mozambique or what's going on there. And to the north, it's Kenya, which is relatively, which is really stable. Rwanda is now stable. And another country, I'm trying to get the geography, is all pretty stable. Burundi is fairly stable as well. So It has been relatively unaffected by particularly what you see going on in West Africa.
How substantial is Tanzania's defense force?
Oh, I don't really have an answer to that question. I do know that there are quite a few military personnel as you come into the country. You don't see a lot on the streets because it's unnecessary. Andrew, you want to answer that question too?
Yeah, to tie it back to that prior question as well, Stephen and John, it is that the borders are kept very secure, and Tanzania does have a good sized military force, but they do keep the borders secure.
So I could almost joke. I spent a month going back to the village my father left 101 years ago in Greece. You can almost swim to Turkey. Our beach is the logical invasion route. The armored division in our village is 8 US tanks left over, Shermans from World War II. And I'm draft eligible for 99 generations, and I just swim peacefully and enjoy myself. So there's risks everywhere.
That is correct. You're 100%. And then look, I've been all over the world.
I'd rather be in Tanzania than in my village in Greece if there was a war.
Yeah, and I'd rather be in Tanzania than over on the west side of the continent as well.
Yes. I've spent a lot of time in Africa, and I must say, Tanzania is a real gem.
Do you plan to have quarterly conference calls going forward?
Yeah. So good, John, just on the prior question, I'm sure Tanzania is safer than even some of the south side of Chicago.
We don't have to go into our neighborhoods. Are you going to have earnings conference calls when you start to mill some rock?
Yes. Yeah, that is on the plans. We are going to be looking at a more of a proactive investor relations program going forward. And I think that will dovetail well into having conference calls, yes, on quarterly results.
Michael, I think you keep too much of a poker face. Someone asked, is Michael excited about the future?
Michael's very excited about the future. Thanks for asking, John. I spent a lot of time traveling to Tanzania when I was at Barrick for almost 20 years. I got to know the mines, the geology, the people, the culture. Really, really excited about this deposit and the team I'm working with. Thanks for asking.
What is a fair PE for a company of this size is the question. And I guess one way to approximate might be the reserve life as a starting point.
Yeah, so John, as you know,
address that.
Yeah, as you know, in the mining industry, PEs is not the, until you get to be a significant producer, PE is not the right metric to measure yourself by. The right metric would be your resource life, your enterprise value to reserves, your enterprise value to resources, your price to net asset value. Those are the relevant metrics for a mining company at our stage. The fact that we have cash flow is a bonus.
The benefit of publishing a feasibility study to NI 43-101 is it helps people get around all those metrics.
Yes, correct. And also, one of the things that, shareholders and others have noticed, we are starting to get picked up by analysts. And we expect that to continue into the new year. And they also help to form what your net asset value is and those type of metrics, correct?
Well, super. We got through the questions from the audience. And you even had an audience of up to 70 people during the call, which is quite good for a company we're just getting to know. Thank you very much for your participation. Oh, there's one more question.
Yeah.
How did Andrew ever come across a property like this?
I'm gonna let him answer that one.
That Andrew did it all alone and deserves full credit.
Yeah.
Not at all. But we've got a great team, and there's been quite a bit of work there before we arrived, and but it's just great geology. You know, we are in an Archean shear zone hosted system. There's a lot of gold around. There's a lot of gold around us, including at least 3 giant deposits. So we're in the right place.
Super. Thank you again. Congratulations, Stephen, Michael, and Andrew. And we look forward to your future returns.
Well, thank you.
Thank you very much, John, for hosting us. And thank you for all the questions from the audience. Greatly appreciated. Thank you.
Thank you. Have a happy holiday.
You too.
You too.
Thank you.